Most traders add an indicator to their chart and immediately ask, should I buy or sell? ATR does not answer that. It answers a completely different question, and honestly, it's a more useful one. I'm Isiah from the Investor Center, and this is the first video in our indicator series where we break down every common trading indicator one at a time, starting with ATR, the average true range. So, average true range doesn't tell you which direction the market is moving. It tells you how much a market is moving. That's it. It's a volatility indicator, pure and simple. On most platforms, including TradingView, ATR defaults to a 14-period setting. All that means is it's looking at the last 14 candles on your chart and averaging out how much price moved during each one. If you're on a daily chart, it's the average daily range over the last 14 days. If you're on a 1-hour chart, it's the average hourly range over the last 14 hours. The concept stays the same. The time frame just changes the context. Reading ATR is straightforward once you know what to look for. If the ATR line is rising, volatility is increasing. The market is making bigger moves. If it's falling, volatility is dropping. The market is quieter. And this is where a lot of people trip up. A rising ATR does not mean price is going up. It means price is moving more in either direction. Big sell-offs show a high ATR just as easily as big rallies do. Let me put a number on it. If GBP USD has an ATR of 80 pips on the daily chart, that's telling you the pair has been averaging around 80 pips of range per day recently. If it drops to 30, the market has gone quiet. If it spikes to 150, something significant is happening. A news event, a central bank decision, whatever the cause, the market is moving aggressively. So why should you actually care about this? Because volatility affects everything about how a trade plays out. When ATR is very low, the market might not have enough movement to be worth watching. When ATR is very high, the risk of sudden sharp moves increases significantly. A lot of traders also use ATR to help with position sizing, factoring in how much a market is actually moving when they decide how large or small a position should be. We covered position sizing in detail in our risk management video, so I'll link that in the description if you haven't seen it. The key takeaway is this: ATR gives you context. It's not telling you what to trade or when to trade it. It's telling you what kind of market you're sitting in right now. And that alone can help you avoid situations where the conditions simply don't suit what you're trying to do. If this is the kind of content that helps you, subscribing genuinely helps us to keep making these videos. And drop a comment if there's a specific indicator you want us to cover next. We do read every single one. ATR measures volatility as a number on a separate panel below your chart. Same concept, completely different visual. That one's coming soon. I'm Isiah from the Investor Center, and we'll see you in the next one.